A person who buys a corporate bond lends money to the respective company. It is almost like lending money to a friend. There is, however, an essential difference. Corporate bonds have a defined maturity, interest rates are agreed in advance, and bonds are securitized receivables. This means they can be resold by their owners. This is why many bonds are listed on exchanges. In the US and the UK, corporate bonds are more widely traded than in continental Europe. In the US and the UK, institutional investors, but also many private investors, buy bonds. In contrast, companies in Europe tend to borrow money rather from their banks than from investors. This means that Europe's private investors and savers prefer banks that grant loans to carry the risk. This is partly due to the fact that smaller companies usually do not have external ratings. For this reason, investors are unable to obtain standardized information on the financial situation and economic performance of such bond issuers. But private investors and savers also give up returns. In times where interest on savings accounts and secure sovereign bonds are lower than the inflation rate, it makes a big difference where people park or invest their money. Things are gradually changing in this segment of the financial market. In comparison to the years prior to 2008, corporate financing through bonds is becoming more important. In 23 of the 28 EU member states, more corporate bonds are being issued today than 10 years ago. One reason is that commercial banks are not lending money as easily as before due to stricter capital requirements. Granting fewer commercial loans makes it easier for banks to meet these stricter capital requirements. Precisely in countries in which lending by banks is on a decline, the volume of bonds issued by corporates has increased. This applies to Spain and Cyprus, as well as to the countries of Central Europe, like Croatia, Slovenia, the Czech Republic, and Hungary. Future economic growth depends very much on one particular question. Is it easy or difficult for companies to get financed in order to grow? A functioning market for corporate bonds could therefore play a more important role in Europe. But this means also medium-sized and smaller companies must have the possibility of raising funds by issuing bonds. Europe's commercial banks can support this by advising companies that want to issue bonds.